Hello, doctor. My name is Al Hikmah Khalifah Mizan, matrix number 3090069, and today I'll be presenting the annual report project for the two companies that we have chosen, which is DKSH Holdings Malaysia Berhad and DNO Green Technologies Berhad. This is our team members. I will go over the introduction for the overview of our company's profile and business operations really quickly. DKSH Holdings Malaysia Berhad is established in 1923 and based in Penang. Its parent company, DKSH Holdings, is a majority owner at 80.73%. Firstly incorporated the business in 1991 and publicly listed in Bursa Malaysia in 1994. Their main operations are mainly focusing on market expansion services, helping other companies grow. The company is divided into three parts: the consumer goods, healthcare, and finally a separate division owns, operating the famous Amos chocolate chip cookie retail chain. Nextly, going over with DNO Green Technologies Berhad. Founded in 2000, it became listed in the Bursa Malaysia in 2004. The company's core business is driven by its subsidiary, Dominant Opto Technologies, which makes DNO a key player in supplying the global chain for automotive LEDs. They have a headquarters in Malacca with a strong orientation towards research and development, and they specialize in making surface mount technology LEDs that are compact and powerful lightning components that are essential for modern vehicle designs.
Hi, my name is Nurul Alfa binti Zalahuddin, my matric number 309813. I will be presenting the liquidity ratio for DKSH Holdings and DNO Green Technologies, focusing on the current ratio and quick ratio for the year 2024. What is liquidity ratio? Liquidity ratios measure a company ability to pay short-term debts using its current or quick assets. A higher ratio means stronger short-term financial stability. For this study, we use two formulas. The first one is current ratio. Current ratio equal to current asset divided by current liabilities. And secondly, the quick ratio equals to current asset minus inventory and divide current liabilities. Based on the result of current ratio, DKSH has a moderate short-term liquidity position because it has only 1.24 of current asset for every one of current liabilities, while DNO shows stronger liquidity with 1.72 in current assets per one of current liability. For quick ratio, DNO is still slightly better. Both companies fall below the ideal value of 1.0, meaning they depend on inventory to meet short-term debts. In overall comparison, DNO Green Technology is in a stronger liquidity position than DKSH. DNO can meet short-term debts more comfortably while DKSH operates with a smaller safety margin. Based on this result, we suggest DKSH improve liquidity by boosting cash flow, strengthening debt collection, and reducing short-term liabilities. Meanwhile, DNO should avoid holding too much idle cash and maintain effective working capital management. That is the analysis for liquidity ratio section. Thank you.
Hello everyone, my name is Nick Mirza Mukri bin Ahmad Kamal Arifin. My matrix number is 312823. In this video, I will be presenting about activity ratio, which measures how efficiently a company uses its asset to generate revenue and cash. And I will be comparing two companies in Malaysia, which are DKSH Holdings Berhad and DNO Green Technologies. These are the two ratios we focus on. First one is total asset turnover, and the second one is account receivable turnover. These are the formulas for both ratios. The first one is total asset turnover. The formula is net sales divided by average total asset. This ratio is to measure how much revenue is generated for every 1 ringgit assets invested. And then the second one is the account receivable turnover. The formula is net sales divided by average trade receivable. This ratio is to measure how quickly customer makes payment. For total asset turnover, DKSH generate 2.4248 times in revenue for every 1 ringgit asset invested. Unlike DKSH, DNO only generated 0.5978 for in revenue for every 1 ringgit asset invested. This shows that DKSH generates more sales per asset compared to DNO, which uses more costly fixed asset like factories and machine to generate sales. And then for account receivable turnover, DKSH achieved 4.6792 while DNO Green Technologies achieved 4.0347. This shows that DKSH collects customer payment more quickly. Now for comparison, DKSH collects payment a bit faster than DNO Green Technologies, and then DKSH is a company that operates as a service and trading provider. Unlike DKSH, DNO Green Technologies require big capital investment in machine and factory to generate sales. And then now, suggestion for both companies, DKSH should provide early payment discount to shorten its average collecting period. And then DNO Green Technologies should make more marketing to generate sales, and then they should tighten its credit policies.
Assalamualaikum. My name is Aizulaika binti Army. My metric number is 309389. Today I'll be presenting about the profitability ratio. So this ratio is used to assess company's ability to generate earnings relative to its value, assets, operating costs, and equity. So for our analysis, we focus on profit margin on sales and also return on common shareholders' equity. Moving on to profitability analysis, from this we use two formula. For profit margin on sales, net income need to be divided by net sales, and for return on common shareholders equity, net income is minus to preferred dividend and then divided by average common shareholders equity. So based on this calculation, we found that for margin on sales, DKSH generate a smaller amount of profit, which is only 1.55%, and while DNO, the company are able to turn 3.89% of their sales into profit. For return on common shareholders equity, DKSH performed better by gaining 13.10% in using the shareholders capital to generate profits. And on the other hand, DNO is less efficient to provide strong return for investor because they are only able to generate about 4.64%. And that is all for the profitability analysis. For overall comparison, both companies have their advantages and disadvantages. For DKSH, the company shows better performance because they are able to earn higher return on shareholders' equity. Our suggestions are the company should focus on setting benchmark to compete among competitors and focus on innovation. On the other hand, DNO is also showing a better performance in gaining more profits based on their sales. As a suggestion, the company should invest in technology and automation, which could lower their labor costs and operation costs. And lastly, they also need to monitor key performance regularly.
Moving on with the leverage ratios. The leverage ratios assess the ability of a company to meet their financial obligations. Now, carrying too much debt can be dangerous for a company and its investors, but the debt may help fuel growth if a company's operations can generate a higher rate of return than the interest rate on its loans. Basically, the amount of debt a company carries compared to its assets or equity. And there are two parts to this: debt to assets ratio and debt to equity ratio. Now, comparing both of the companies for DKSH and DNO, the formula for debt to assets ratio is total liabilities divided by total assets. And for debt to equity is total liabilities divided by total assets. For DKSH Holdings, the debt to assets ratio is 0.716. For DNO Green Technologies is 0.467. Moving to debt to equity ratio for DKSH, it is 0.66, and for DNO Green Technologies, it is 0.52. Now, interpreting for debt to assets ratio, DKSH is operating with more risk compared to the financial safer and more stable position of DNO. DKSH is highly leveraged, with nearly 72% of its assets funded by debt, indicating that they are doing an aggressive financing strategy. For debt to equity ratio, DNO is less leveraged, as you can see, and is less reliant on borrowing to fund its operations and compared to DKSH. Now, moving to comparison and improvement suggestion for DKSH, comparing DKSH is operating with significantly more risk. It is highly leveraged as well. For DNO Green Technologies, it is financially safer and more of a stable position. And suggestions for both of the companies, for DKSH, they should slightly raise its leverage to expand the company to drive future revenue growth. And for DNO Green Technologies, they should keep its current ratio and concentrate on debt optimization.
In conclusion, our analysis reveals the main difference between DKSH Holdings and DNO Green Technologies. DNO perform better in managing short-term debts and achieving higher profitability. On the other hand, DKSH is more efficient in using its assets thanks to its service-based business models. And both companies can improve their financial position by optimizing cash flow and speeding up the collection of payments. While DKSH relies more on debt for growth, DNA maintains a lower risk with less debt. To achieve long-term growth and stability, both companies should focus on managing their debts, improving operational efficiency, and leveraging technology to boost profitability. And that is all from our group. Thank you so much.